All right, guys, what's up? We have a little bit of we had a technical difficulty. One sec. Let's see. Let me just get this going. For the love of God. All right. There we go. 1 second. And all right, finally. All right. I don't know what's going on, why the stream disconnected, but it is what it is. All right, let's see. Can everybody hear me? Is the stream working, not working? Can you just confirm? This gold spot is getting into an interesting level right here. And if you fib it as well, if you fib this, a little too soon. So my my area of interest, let's see. My area of interest. Okay, well, it is kind of interesting because it's retesting previous, well, the order block, if you will, or previous support turn, now turn resistance. Okay, so on closing basis at least, you can see that this area has been an area of interest for some time. Let's see if what the book map is telling us what's happening here. Where are the orders sitting? So this is the futures price feed. Let's switch to futures. Okay, so I would, if I'm going to be executing on the futures markets, I would wait for price to get to this above 618. So again, as we were talking about yesterday, the sweet spot for trading for deep pullbacks for me is this area right here between 786 and 618. So this is what I want to see if I'm going to be looking for shorts. Okay. So the reason why for that is because this gives me a high probability trade for a deep pullback. And once it gets into the demand zone, we can roll over. All right, so let's see. Not demand zone, where it's going to get offered. So this is going to be until the price. You're going to have a confluence basically. You're going to have the 618, 782, 786 fibs range. You have this previous order block. This is where the price is closed, and obviously retest of the broken head and shoulders trend line. So you have a triple confluence of things happening. Does it mean that it's going to stop it? No, but it's just an area of interest. And like I always point out, the way you trade is you wait for a price to get to the area of interest first. Once it gets there, you can start looking at internals of the market. Okay, so what are the internals of the market? We have to look at the shorter time frame. We can look at 1 hour and below. 1 second, I gotta turn off my phone. Okay. All right. Here we go. So looking at the internals of the market, we want to see basically buyers step in around this area and have a follow through on that. So we're gonna use. We want to see basically, because we're using the futures data, because we're using a futures data, we can see the internals of each candlestick, okay? We can see who's winning, buyers or sellers. And for example, this was today's local overnight bottom, and this coincided with 3 a.m. London time, which is London Open in New York terms, in New York time. In New York City time zone, 3 a.m. is when London opens. And you can see we were drifting lower, lower, lower. And then at 3 a.m., yeah, you get this candle right here. You get a pin bar candle with bullish delta, with buyers dominating the sellers, and you obviously get a small follow through. And you can could have definitely scalped this at least 1 to 1, okay, if not higher. So this would have been your entry above this candle high when it closed. This is your stop loss. Let's see where the 1 is. Okay, so it just got done right here. All right. So this was a simple 1 trade that you could have taken in London Open. I was sleeping, so I didn't take this trade. When I was a younger man, I used to wake up for these. Yeah, can you guys confirm that the video is moving fine and everything is fine on the feed? And the volume. All right. So yeah, so when I was in my 20s and my 30s, I was trading London Open. Now I just simply don't have to. But there are definitely opportunities. You have two types of areas of interest. It's time wise and price wise. Okay, and time wise, this was a London Open pump with a follow through. So this was a no-brainer 1-to-1 scalp trade as a day trade right there. Okay, you should have taken. You could have taken this easily, and with low risk. So essentially, you see that there was a pullback. They tried to take it down. Sellers were stepping in, but because then London volume comes in, just like we're going to see volume in 15 minutes for U.S. Open, for U.S. stocks open, right? We have same deal with the London Open that's when the majority of orders get executed, and you start. That's basically a new day in Europe where you have a new flow of money, and this is where you want to see how the London Open, what it does, because it sets up for the whole rest of the day until U.S. session, and you can definitely capitalize when you see proper stuff. So this is London Open. This is the follow through, and we're still getting the follow through. So now, what do you do now if you missed if you're in US and you were sleeping? All right. Well, the next area of interest, like I said, it would be retesting this order block here. All right, on a 1 hour time frame. Let's see what happens. The confluence is there. However, this is a lower probability trade. Because it's against the trend essentially, because you are trading against the daily bullish trend. So if you're trading, this might be just a pullback, and this might go up. So if you're going to be looking for sells, always look for sells. You have to go smaller size for this type of trade. Plus tomorrow we have federal funds rate, so United States Federal Reserve will be giving their policy guidance, and they're likely to leave their rates unchanged. That's the market expectation. If they're gonna cut rates, the stocks and everything will be through the roof, including gold. If they leave it alone, we'll see, because it's already priced in that there's no change in the. But they can tweak the language during the press conference onto their future guidance. So that's why tomorrow is going to be the big day. Today is a day where you should be nimble, because no big trader will be committing too much. The market will not be moving a lot today prior to tomorrow's FOMC already. So you have to be careful. A lot of people will be exiting their positions prior to big news days, and you get erratic type of price action. It's not clean, okay? Because a lot of big traders will close their positions and wait for tomorrow for the guidance on Fed, and then they will still get back into the market if you're trading with intra-week trader. All right, so for now we're just flat. A little bit, obviously, the bulls are dominating, as you can see right here. The bulls are dominating the cumulative volume delta, so the difference between buyers and sellers. The bulls are still dominating, but the tape is flat. So these are the areas of a lot of orders are sitting. So on the futures price feed, it's around 60, and where lo and behold, this coincides obviously with a round number with 618 and the previous retest of this neckline. Okay, even though it's ugly, but it's still a trend line or a neckline, whatever the fuck you want to call it, doesn't matter. This is the area of interest. As you can see, there's a bunch of orders sitting right here. Can these orders hold off? Oh, 1 second. Maybe it's fine. Okay, thanks for confirming, guys. So the orders here will there be enough firepower to withstand the bullish price action right now? So because the price is rising, the bulls are dominating, and there's a bunch of orders sitting right here. I'm not gonna be leaving an order here because it can just pop through them. What I'm gonna do is I'm gonna wait for the price to start stalling, and then on a shorter time frame, I can, even on a 5 minute, well, 15 minutes will be probably better. I can go and start seeing, when I start seeing around the area of interest, consecutive negative candles with internals confirming that it's time to sell. That's when I will take a step, because now I'm stacking probabilities on my side, and whether or not it will work out is you never know, obviously. So, but you want to stack as much for you as you can possibly do, right? So all the confluences, all the everything we have discussed points to the fact that this might be a good area to short, to take a stab at it at least. But again, I'm not going to be leaving orders. I'm not leave an order and then see what happens. I'm more of a let the price get to the area and then confirm to me. So basically the difference is like this. So some people were bottom picking somewhere here, and they're, oh yeah, now but I'm okay waiting for this for the London open candle to close for an hour, which will tell me, okay, yeah, this is a good turnaround. Positive delta, pin bar candle. I mean, it's textbook turnaround, picture perfect turnaround scenario. Okay, so yes, I bought above this candle high. I didn't buy here, so I lost on 5 points of whatever the fuck, right? But I'm still in profit, 1-to-1 at least, with confirmation, with peace of mind. Okay, instead of gambling away and seeing whether or not some area will hold or not. Okay, so yes, I will not get the best price, but I will sure as hell skip a lot of nasty trades this way. My technique will keep me out of market more, which will obviously I'll take less trades, but there will be a lot better trades than just leaving orders at levels. But for some people, they're okay leaving orders. Like I said, you have to experiment what works for you. Some people are okay leaving orders. Some people are not. Okay, this interesting. Okay, this is the wrong contract. This has ended. I think. 1 second. Yeah. Okay. Anyway, so let's see how we. Let's see how we do. Yeah, there we go. So a little higher. I'm not. I'm still sitting and waiting. Plus, you have in 8 minutes. You have the open. So 1 second. Give me 1 second, guys. Wanna do something. There we go. Yeah. So yeah, you can see that now all of a sudden the sellers are stepping in around this area prior to this huge zone of interest. So um, it's still, I don't think it's still enough, but let's see what's happening. Let's open up the 60 level so we can see the 60. Okay. So again, nothing interesting so far. Bulls are dominating, but we haven't arrived to the area. So obviously, people are still bidding it up until we get to the area of interest. So we're just chilling for now, and we're gonna wait for the market to open in 7 minutes. And that's let's take a look at that. Let's take a look at NASDAQ. Jesus Christ, I have like 4 hours of sleep in me today. All right. We still have the opening gap. Gaps like to close usually. Again, specifically because this might have been just a FUD bullshit move with this the Chinese deep, whatever the fuck, software, hardware software, which runs better than the OpenAI's ChatGPT with less cost because it's highly optimized to run on shittier hardware. Okay, so this was basically the cause of sell-off yesterday, as discussed. So now, but price does like to close gaps, so it can easily go here and then go down. But the gaps like this, opening Sunday gaps, act like fucking magnets. And so far, yesterday we are seeing V shape. Okay, recovery. So and we also are making what? After we've completed the sell-off, we're making, this is the high, this is the low. High, low, high, low. Okay, so higher highs and higher lows. Let's see exactly, make it precise. If we have taken out this high or not. Yeah, by a smidge. See? And then, again, area of interest, 1 hour candle, date reversal candle at the area of interest, footprint chart. Let's see the internals. Okay, so internals of this candle are not super ideal for me to would have been enter trade. Again, sometimes it just doesn't set up because we had a positive delta at the in the negative candle, so it's a mismatch. So be it. Even though it looked like a good scalp, and if you weren't looking at internals, you could have taken it. But I prefer to take when everything is correctly matched, like it was in the gold trade we've discussed previously. But yes, you could have easily had one-to-one. This is a pin bar candle at the resistance with a follow through. So there is definitely one-to-one trade here. Okay, but that's not my. Like I said, I want to see the internals confirm it. You don't get confirmation every single time. And my way, usually, like I said, it usually keeps me out of trades, but it keeps me out of shitty trades. So I want to take only the most conservative, not the most conservative, but the something which has confirmation, which stacks layers of probabilities from me towards my side. Okay. And if I don't see certain things, then I don't need to be in the market. You know why? Because market will give you another opportunity quite soon. Okay, so we've seen one opportunity on gold in London Open, and this was another opportunity with NASDAQ. So I would have taken the gold trade, but not the NASDAQ trade. So one-to-one. So let's see what's happening. Obviously, we have 3 minutes till the open. So let's watch what's happening to NASDAQ. This is no longer relevant. Hold on. All right. Oops. All right, so right now market is indecisive. As you can see, there's nothing happening. This hourly candle is anemic because everybody's waiting for the open. They want to see the flow, and the basic tenet of trading for today will be and this week. Are we going to take out this low or not? Was this just a pullback, an irrational, over exorbitant, people just rush to sell, panic sell, which provided opportunities for you to go long, or this is actually now going to be some kind of top where we're still going to drift lower. And if we're going to take out this low, the yesterday's low, I think we're going to be in big trouble. Well, not in big trouble, but we're definitely, the bullish case is not going to be there anymore. Okay, so I would be looking for sells at that point because we're going to be probably consolidating lower before another leg up, before Trump steps in and asks the Fed to cut rates or some other shit. But that's, yeah. And then obviously you have this, well, so these two. So this was lower, low, lower, high, lower, low, lower, high, lower, low. But then we just took out the higher highs. All right, so we had a deep pullback into 786. However, we had a shift in structure, right? Market shift. So in price action. So we took out this previous, so we're no longer making lower lows and lower highs, which is the definition of the downtrend. We've taken out the high. So the big question is, are we going to put in, is this the lower, did we have a shift in the local trend and market open? And whether or not this was a pullback. And then if we take out this high, then it's going to be very fucking bullish. But again, if we're taking out yesterday's low, a lot of people will panic sell saying that this whole fucking thing is over, and we're essentially getting one of these things. Again, head and shoulders, by the way. See, sometimes they work. Again, break of the neckline, retest, right? Retest into the neckline, and then reversal. Continuation. So anyway, a lot of big traders are watching what's going to happen today and tomorrow because a lot of people, markets are obviously overbought. We've been rallying, and they want to ascertain or not whether we are now going to get consolidated pullback into this 200-day moving average, which is the value area for the daily. Okay, so right now you can see this is yesterday's candle. These are normal candles from last week. This is today's candle. See, nobody wants to commit a lot of capital for a simple reason is because tomorrow is Fed fund rate. So they're gonna do. Everybody wants to see the forward guidance because that will basically tell them how to act for the next couple of weeks. And right now, there's no point in committing a large chunk of capital, deploying large chunk of capital for big traders, for institutional traders prior to such a big release because it can change the picture like that based on what Fed is going to say tomorrow. And since we don't know what the fuck they're going to say, they can always, well, some people might do, but we don't. Most people will not commit, professional traders, again, more professional traders will not commit capital prior to such big news release event. But so I would leave the stocks alone today, and you can see that they're all flat for today. So we have S&P mini 0 on NASDAQ, 0 on YM for change for today because we're dead in the water. Everybody's just chilling, sitting, and not going one way or another. See gold. All right, so now gold is getting to our area of interest. It's getting up there. So if I'm gonna be shorting this, if I want to go against, if I think that this was a pullback and we're still gonna roll over as a scalp, I want to see some kind of bearish internal situation develop. So far, we're very bullish. The delta is bullish, etc., etc., etc. And somebody ate up all those big orders at the 60. So we popped at the 60. And as you can see, the orders there's no big resistance. There's no longer a big order block sitting to protect. So there's the path of least resistance is to the upside still. So this thing can still run. And that's why you don't leave an order like a dickhead and get fucking ran over like like standing in front of a freight train or a truck. Right? So you see that the volume is bullish. So I have a thesis. I have an idea if I want to go short or long. But the market needs to confirm whether that idea is something you should be trading or something you shouldn't be trading. Okay? All right, let's see. So far we're just pumping. Again, let's see. I'm not forcing, and a lot of people, they want excitement, they want action, they want fireworks, and the truth be told, this business is just you sitting and watching and let the price develop, and not to have an emotional outburst of some energy well, you don't want to be emotional, okay? Oh my God, because then you need to make decisions when you're calm, collected, and focused. And so when you're in a heightened emotional state, you start being excited. When you start being excited, you start fucking smashing that button because you want to gamble and you don't want to trade, and it takes discipline to just sit on your hands and do nothing. And I always give this example. I remember, like, when I started, I would take 5-6 trades a day, and that's after, I don't know, a good 5 years of trading. I was hired by this fund, and my boss would take 1 or 2 trades a week, max, and I would take 5 trades a day. And at the end of the week, we would always see our P&L come in, and he would make a shit ton of money because he would take few precision shots that would net him the profits, while I was shooting in all directions. Not all directions. I was already competent, but I was still doing too much. And as a young man, you have all this energy, testosterone through the roof. You want action, and it's not the sport. It's the opposite. You need to do the opposite. You have to be cool and let the price and market happen the way. If you're right, and this is an area where you can short, then let the market confirm that this is so, because it can keep going and going and going. So the next area is 63. As you can see, there's a bunch of orders and now piling up. People are getting 63 right here, 702. Let's see what happens. That's another, as you can see right here. Again, I'm not saying that this is going to top out here and turn around, but if it does, and the market confirms to me that it does, then I know I'm doing something right. But until the market confirms it, that means fuck all to me. Okay, that means that I just had an idea. Sometimes these ideas work out, but that's how you become selective with your trading. You don't. You have an idea what should happen, but the market has mind of its own. So if you're not in sync, if you're not in sync with the market, and the market does completely the opposite, I can't force most novice traders. They try to force say, well, I'm fucking right, and this is what should happen, and it's nonsense. All right, so you should just calm down and let the price and market develop, and prove to you that it's doing what you think it's doing. And that's when you both are in agreement through confirmation of price and price action. That's when you take a stab at it. And that's how you get high winning percentage trades, high probability trades, okay, which I like to do. I'm looking at I just have a bunch of monitors, so I'm spinning my head around looking at what's happening. Okay, so, all right, NASDAQ is rolling over a little bit. There we go. So we did 50% retracement. This is of this leg right here. Yesterday's sell-off, we did 50% retracement, and we're trying to roll over. So we're making higher highs, higher lows, but right now we're taking out previous swing. So this is telling me that if we have a close below this level, I should be looking for shorts. So any pullback I get, I can short it intraday. All right. So what would be the area of interest? So this is the level I want to see pop. Okay. If I see a close below this level, I would want to see a pullback. And pullbacks do happen. Okay. So don't rush it. You don't need to FOMO in right now. How many times I've been showing you that? Well, it's actually, what is gold doing? It's still dicking around there. Let me just switch to NQ. See the order book on this. Ooh, what the hell is it? Relax, relax. There we go. So lots of water sitting 21,200, 200 level. Where's 200 level? Oh, this is shit. This is cash market. This is CFD. So, okay. So this is actually very interesting because we just, one sec. Okay, this was the big swing from the hourly. Okay, but this is the structure here actually is quite a better looking. So we're probing below. A close below will get me into me trying. This is essentially we are a market shift in structure. All right. So to the downside, let's see if we are able to close, and then I can look for possible shorts. Where can I do possible shorts here? You know, so first of all, we're gonna draw a resistance trend line. This is some kind of ugly head and shoulders developing as well, but this is a double top. So double top. So you're gonna mark areas of interest. Double top. This is the bottom right here. You can clearly see these two areas on an hour. Okay, but for the sake of argument, let's just do it like this. And if this is a double top and we continue lower, I want to see my possible targets. So my possible target will be the measurement of the distance of this channel from the breakdown point right here. And this target's exactly our lows. All right, so right now it looks like you can see that the sellers are just stepping in and murdering everybody who is trying to buy. This is the volume. All the sellers and a few little puny buyers trying to do something, but obviously you can see that the trend is down and sellers are just dominating the shit out of the market. So we're running low. Okay, I don't chase markets. I don't trade breakouts like this. You know why? Do you know why I'm not shorting right here? For the same reason I didn't buy right there. Because at some point, this was bullish, bullish, bullish. And this candle, when it popped above this high, it looked bullish. It looked fully bullish candle at some point. And some people went long, just like some people went short right here. All right, and what happened to them? Well, they just got stopped out right here. This is their stop losses running. So I have to be disciplined. This might be the momentum play, and this might be running. And you're like, oh my God. And some people will short right now, and they will make money, okay? And that's the worst thing you can do to yourself, because you're going to basically teach yourself shitty trading habits. And that's the worst thing you can do. That's the worst thing you can do. By the way, somebody said, that, yeah, in 25 minutes we're gonna have news. You always have to be aware where you are on the timeline. You go to the calendar, all right. You always have to know when news are happening. So you know, go to Forex Factory, go to calendar. I don't look at the yellow events and some bullshit, but always look. So we had new home sales. What the fuck, that was yesterday. So we have the see the red event at 10 a.m., which is in 17 minutes. We have the consumer confidence coming out. Okay, so this will provide this will be a slightly market moving event for sure. So you should always be aware. But the big kahuna is obviously is going to be on Wednesday tomorrow. You're going to have at 2 o'clock. You're going to have a federal funds rate, and then at 2:30 you have the press conference that runs about an hour. So with Q&A, and that's where they're going to release their statement. They're going to do their the Fed is supposed to hold the rates at 4.5%. So, but they might offer some clues as to therefore what they're thinking to do in the future, and that's why this conference is important. And you have to listen, and based on that, you can make judgment as to how to trade in the next week or two or whatever, or at least the next few days. Okay. Anyway, so this is why I don't chase. So what I would what I want to see is this candle to close negatively. I want to see some kind of pullback into some area of interest. So retesting previous, it can easily do this. Basically, it can go to this support here. 1 second. It can go to the support here. Some buyers will step in, protecting this range, creating a range, and then it can go retest this broken support. And once I see a turnaround there, that's when I want to step in, because I know it's probably going to go start running down. I want to see negative action somewhere around this area. Once this candle closes. So again, you have to be patient. You have to let the price develop. Just because you want to trade and you want to make money right now doesn't mean market will be doing that. You know, it just you have to let the price develop, and when everything sets up the way it needs to set up, that's when you take the shot. So for now, see, there you go. We have to wait for candle to close, and I know this is not exciting. You want to see fireworks, you know, fireworks central. Here's your 15-minute chart with your ICT order block, smart money concept bullshit too. Again, so maybe we can go like this and start rolling over now. So we'll see. Again, many scenarios in my head, and your job is to find the scenarios and wait for confirmation. If the price is doing exactly what you think it's doing, it will tell you that it's doing. You'll see it happening, and that's when you execute a trade. You don't just hop on willy-nilly, because one moment you're feeling emotional driven states, you feeling like the market is going to keep going down, you FOMO in, for people FOMO in, and then they if people FOMO in here, they got fucked. People might get fucked right now as well. Who knows? So that's why I'm waiting for various scenarios to develop. I create the scenarios by looking what has previously happened, typically in these situations throughout my trading career, obviously, right? That's why you need to have some time under your belt. You develop these scenarios, and then you let the price confirm whether your scenario is the one that's being played out or not. And if it's not, then stay the fuck out of the market. 1 second, guys. I have cleaning ladies coming in. Hello? Yeah, send them up. Yep, thanks, bye. All right, boys and girls. Unfortunately, I have to cut it short. I have a cleaning ladies coming in. Might be back to do an afternoon session. We'll see. But tomorrow is the big one. And tomorrow is the one I'm going to be concentrated on. I will be there tomorrow for the FOMC and for everything else, okay? For 2 p.m. we can be trading that live. I'm going to explain to you during the conference what I'm looking for when they talk. Obviously, it's boring. He talks for a fucking hour and a half sometimes. He just yap. So, but, it's not just all shooting, guns and fucking making money every 0.5 seconds. You have to. It's work. And not every day is a fucking super exciting day. Sometimes you need, you have to do the boring stuff, and listening to speeches is one of them. All right, all right. Thank you, guys. I hope this was useful. Every day I try to give you tidbits of some wisdom that I've picked up over 20 years, and I'll be here tomorrow at 9 a.m. New York time, and then I'll do a afternoon session tomorrow as well at 2 p.m. All right. See you all there. Cheers.